Last week we saw that builders are pulling less and less new permits, which means we can expect less new housing supply in the future. And this week we got the new home sales report for May and we're able to see why they're pulling less permits. New home sales fell 11.3% last month and are down 16.5% year over year. But before you panic, remember this is national data and we always look for trends, not month-to-month data. And more importantly, we always need to add context. I am sure there are going to be accounts on the internet that are going to use this one data point and say this is 2008 all over again. But I will explain to you why it's not even close. Home prices have likely peaked for the year, though it's likely they'll stay up around where they are for a few more weeks, and then slowly trend down all the way through the winter. We saw another small increase in the number of people applying for mortgages, but remember we're working off of record lows. Overall inventory continues to look more and more healthy every single week, and we've actually got 38% more homes on the market today than we did this time last year, but weekly new listings are still lagging way behind. We're covering all of this and much more in this week's market update. My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties, as well as the national market. We're looking for trends. We're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like, and if you stick around until the end, it's the top 10 ranked chart of the hottest and coolest cities and zip codes in all of Dallas and Collin County. If that sounds like something you're into, make sure and hit the subscribe button. And if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is July 1st. Let's see what the data is telling us. And if this is an old video, you can click the playlist here. It'll take you to the latest weekly market update. Okay, let's start with market news. New home sales are slowing, so permits have been falling, but let's make sense of this data and what it means. Okay, let's start by looking at the single family sales chart. You can see new home sales are still in an uptrend from the lows of 2022. And we know also that purchase application data for new homes are still growing right now. So why are builders slowing down on new homes? Because builders are only here to make money. The last thing they're ever going to do is create a flood of inventory that's going to crash their own prices. So what they see is mortgage rates are staying higher much longer than anyone expected. The Fed doesn't look like they're going to drop them until potentially the end of this year. We started out with the most amount of building permits in January, just like we always do, so that they made sure they had plenty of supply for the summer. And from here on out, they're in no rush to build more houses. They've done the bulk of what they're going to do for the year, and now they're just going to pace out what they already have. And like I said, make sure they don't crash their own prices. So they're not going to make too much inventory. A few other things to note. Yes, we had a big drop this month, but that happens all the time. It happened here, it happened here, it happened here. That's why we never look at one single data point. We always wait and look for trends. And what you see here is we have clearly been in an uptrend since the lows of 2022. And speaking of 2022, do any of you remember the new construction housing crash of 2022? Of course you don't, because it didn't happen. Even though sales were well below where they are today, there still was no price crash. So yes, we had a big month-over-month drop. It's nothing to be concerned about. It happens all the time. There was no price crash here. There's not going to be a price crash here. But now let's look at the chart that will be the most taken out of context this month. This is the number of completed new construction homes that are on the market today. And looking at this chart, it looks like it's going through the roof, right? This means right now we have 99,000 homes completed from new construction builders that are sitting on the market. And this is well above that previous 80,000 number that we were at in 2019. Doesn't this mean that no one is buying new construction and the whole market's about to crash? Well, that's what people are going to try to tell you, that this spike in monthly supply means we're having 2008 all over again. Everything's going to crash bigger than we've ever seen it before. So let's add the context. In a country of 336 million people, with more than 159 million currently working, having 99,000 completed homes doesn't sound like a very big number. But still, we can't deny that it's higher than usual. So let's add some context. This chart is the month's supply of new houses. This means if new construction builders were to stop building right now, how long would it take them to sell all of their available supply? Right now, at the current pace of sales, it would take 9.3 months. So as we can see, we have fewer months supply than we did for a lot of 2022. In July of 22, we actually had over 10 months supply. Yet, if you were just looking at the completed homes chart, you would see that in July of 2022, we had 43,000 homes. 43,000 is way less than the 99,000 we have today, so doesn't that mean the market was much stronger in July of 2022? Well, no, as we see here on the month's supply, meaning the speed of the sales happening, July of 22, even though they only had 43,000 completed houses on the market, they had 10 months of supply. They had way more supply. Sales were way slower than they are now. And again, in July of 22, we had over 10 months of supply. And do you remember the housing crash that came from that? No, you don't, because it did not happen. But now let's compare directly to 2008. In 2007, active inventory was up to 4 million homes according to the NAR data. So right before the crash, there were 4 million homes listed. And the home builders completed units, this 99,000 number we're talking about, it was up close to almost 200,000 then. So in 2007, you had 4 million active homes before the crash, whereas today, there are only 1.128 million active listings. How can you even attempt to compare this market to 2008? But let's zoom in a little deeper to this builder's 9.3 months of supply. So we have the 99K completed homes for sale. That equals 1.9 months worth of supply. So if they stopped building today, they would sell out of that 99K homes in 1.9 months. Then the next 278K homes, those are under construction. Those would take 5.4 months to sell. And you'll know a lot of these homes are going to take 6 months to build. That's why they're building that amount. Because within the next 6 months, those homes are going to contract and they're going to sell. That's the idea. That's why they have this many permits and they're building this many. They're just looking at what is the speed of sales happening right now, and they're just trying to keep up with that demand. They're not going to oversupply. And then the last 104,000 homes, that last 2 months of supply, that hasn't even started yet. And they don't have to start those if they don't want to. If they see things slowing down in these two numbers, they don't have to build this at all. So it's not even 9.3, it's more like 7.3. So for the last time, builders are not going to flood the market with supply. They're in the business of making money, not of providing houses. Like I said, if things slow down, they don't have to build this last 2 months of supply. But now let's get to the real nail in the 2008 market coffin. 2008 was a market full of distressed sellers. That means people who are forced to sell, people who could not afford their mortgage payment anymore because their mortgage rate adjusted up because everyone had adjustable rate mortgages, and they literally from one day to the next could no longer afford their mortgage and were forced to sell. There was a flood of these all over the country. And that's a problem that we will never see again because almost nobody uses adjustable rate mortgages, and thanks to the 2008 crash, lending guidelines are way more strict. You have to be way more qualified to get a mortgage today than you did back then. And for this, let's look at weekly new listings data. So we're looking at 2015 through 2019, just what did things look like before COVID when the market was very nice and normal. As you can see, we have 81,000, 80,000, 84,000, 87, and then in 2018 we had about 99,000, and this is the average number of homes listed every single week for the year. So you can see 80 to 100K homes listed every single week. That is a totally normal market. Okay, now let's look at what does a distressed sellers market look like. Okay, from 2009 to 2012, following the 2008 crash, we got up as high as nearly 400,000 homes there in 2011. So we had 281, 345, 397, 318. So almost 400,000 homes listed every single week for an entire year. And the worst part of all this, we had a ton of forced sellers, but also nobody who wanted to buy a house could get a loan because lending standards had changed so much and because banks were super strict on their lending because of what had just happened. But this 400,000 is like 4 times the normal number of homes being listed every single week. This is what a distressed seller's market looks like. 4 times as many homes listed every week. But even this is just comparing a distressed seller's market to a normal seller's market. 80,000 versus 400,000 a week. Now let's compare those to our current supply-constrained market. 80 to 100,000 is normal, but here is our current single-family new listings every week. As you can see, the highest we've gotten has been barely above 70, maybe 71,000, and if you average this out throughout the year, it's easily going to land somewhere in the 50 to 60,000s per week. That's like 6 to 7 times less homes being listed every single week compared to a distressed seller's market. So if you hear anyone at all comparing this market to 2008, here are your bullet points. 4 million active inventory before the crash compared to 1.1 million active listings today, 60,000 homes listed every week compared to 400,000 homes listed every week, 9.3 months of builder supply, 2 months of which they don't even have to build if they don't want to. Lending standards are much higher. There were many forced sellers back then, and no one could buy because banks wouldn't lend for houses anymore. So you had extremely low demand because nobody could get a loan, and you had extremely high supply because you had a ton of forced sellers who couldn't afford their adjusted mortgage. These two time periods are not even in the same realm. So yes, there are more completed new construction homes sitting on the market than there used to be. All it means is builders are going to slow down on building new homes so that they don't flood the market with supply. Okay, moving on, let's start with national housing inventory. This week, we saw a nice increase of 11,638 homes for sale in the U.S., which gets us up to 645,770 homes available for sale in the country. For reference, the all-time inventory bottom here in 2022, we only had 240,000 homes for sale in the entire country. The peak of last year, we had 570,000 homes for sale. We've already passed that this year. And for context, this same week in 2015, we had about 1.18 million homes for sale. So we're up more than double from the 22 bottom, but still need to nearly double again to get to a normal market. But we are getting closer every single week, and that's the great news of this year. Now looking at new listings, basically we started the year tracking pretty close to 2022 and things were looking really optimistic. And then right here in May, we just started lagging behind. This week we actually had 20,135 less homes listed than the corresponding week in 22, which was the peak of 22. So we're up 8,857 homes from last year, which is good, but still down over 20,000 homes from 2022. And to get to a normal market, we would need to be well above even these 2022 numbers. Another thing to note here is there are actually only a few weeks left until we see the weekly new listings declining every week for the rest of the year. That's important because if you're looking in the market right now and you're not finding something you like, you can expect to have less and less new options to choose from every week. So even though inventory can continue to increase, those are going to be the homes you've already seen that you don't want, and every single week from here on out, you're going to have less new options to choose from. So just keep that in mind if you're someone who is trying to be really picky. Okay, now we're looking at pending sales. You can see weekly pending contracts has been just slightly above last year all year long. We've got about 12,485 more homes pending today than we did last year, which is 3.2% more homes than last year. And that's very interesting because, as you're about to see in a minute, we have way less people applying for mortgages this year, yet we're having more sales. Then the last thing we cover nationally is the number of homes having price decreases. It's normal every year for a third of homes to take a price cut before selling. Looking at the national chart, we are at 37.6% of homes having a price decrease. Last year we got as high as 39.2, the year before as high as 43.2, but it's normal for this number to be increasing this time of year, and it's a good thing because it means days on market are going up, and that gives us time to stack up inventory. But don't be surprised, this number should be going up every week all the way through about November. Okay, now let's look at mortgage rates. So last week we were at a 7.02 and we were just slowly climbing all the way until Friday. We got to a 7.07, but then today we saw a big jump up to 7.14. That's the highest we've been in a while. Okay, looking at the 10-year chart, you can see hovering under this significant black line, that's where we've been, where rates have been hanging out around 7%. You can see Friday, we got right up to the line and we were not breaking it. And then all of a sudden Monday, we just blew right through it. And I have no idea what caused this. I've been pretty busy today, haven't been able to look into it, but I can't think of any reports. Like, I don't know anything that would come out that would cause such a big jump today. The only thing I can think of is it was the end of a fiscal quarter. I don't know enough about the bond market to know how significant that is for them. But I literally don't know what else could have caused this big jump today. So big jump today in mortgage rates. Then looking at mortgage purchase applications, we saw another tiny increase, a 1.2% increase to be exact. So this is the highest demand since way back here in March. It's pretty much as high as we've been since March. So people have been enjoying these rates down to 7%. If this week is going to get back up, starting at 7.14, if we keep climbing, I would expect we're going to see less demand this week. And overall, there is no reason to believe mortgage demand is going to grow significantly with rates this high, which is why you still see a ton of new construction offering anywhere from 4.5% to 5.99%. That's kind of the normal range for new construction. And as I was saying earlier, we're seeing more pending sales this year, even though mortgage demand is still about 13.2% below where it was a year ago. So the people who are applying for mortgages seem way more serious because we're having more sales than we did last year. Okay, that was a lot. Before we move on to the local market data, if you're considering buying a home in Texas in 2024, two things. One, if you want to make sure you don't go broke buying a house, I've made a course for you which has an updated, new and improved version of my max affordability calculator that now includes a budgeting tool. In this course, you and I will input your actual numbers straight from your bank account and figure out with 100% accuracy how much you can actually allocate towards a house, as well as how much that number will get you in today's market with today's rates. It takes into account everything all the way down to your income tax bracket, and it's a no-brainer for anyone who wants to have peace of mind about their home purchase. Then number two, if you just want to know everything there is to know about buying a home here in Texas, whether it's new construction or a used home, those are two very different experiences. So I've made a separate course for each of those, and you can find links to all of these in the description below. Okay, now let's move on to the local markets, starting with the MLS data in Dallas County. There were 577 new listings, that's 15 less than last week. 434 closings, that's 104 more than last week. That's a big jump. Of the homes that closed, 111 were immediate sales, meaning they contracted within the first week. That's 17 more than last week. 363 went under contract. That's 26 more than last week. In total, there are 2,238 homes either under contract or in pending status. That's 91 less than last week. Now moving on to Collin County, there were 462 new listings. That's 44 more than last week. 397 closings. That's 121 more than last week. 85 were immediate sales. That's 14 more than last week. 212 went under contract. That's 9 more than last week. In total, there are 1,800 homes either under contract or in pending status. That's 127 less than last week. Okay, let's move on to the Market Action Index. If you've never seen this, it just takes all of this data and puts it into one easy to read graphic with a number. Anything a 30 or below is a buyer's market. Above 30, we're asking how much of a seller's market are we in? We are at a 42, a slight seller's advantage. We have been declining for quite some time, and for the rest of the year, this should continue declining. But we just look at this every week to see, is everything looking normal or are things looking weird? And so far, things are looking normal. So we have the median list price. As I mentioned a few weeks ago, prices should have topped out. We should hang out around here for the next few weeks before we slowly decline all the way through the winter. But this median list price has been crazy steady, like unusually steady. Median price of new listings has just been hovering up and down in this range. Again, same, we're at the top of prices. They're going to hang around there for a bit. Median days on market has been 42 for a while. The number of homes having price decreases looks to kind of be flattening out over the last few weeks. No real climb there, but would still be totally normal even if it was climbing. Inventory climbing very slowly, but climbing nonetheless. That's good news. And of course, the Market Action Index should continue cooling off. So everything in Dallas County looks totally normal. And now let's look at Collin County. Collin County, as we talked about last week, has been cooling off a little quicker than Dallas County. They're all the way down to 39, a slight seller's advantage. And if you'll remember last week, we had this big drop down here of the median price of new listings. And this, of course, is why we don't look at 1 week data. We look at trends. You see, we had a nice bounce back up in the median price of new listings and the median list price. Again, it's topped out, but we're still in the same range that we've been in for a while. So I would still say this is prices holding steady. Median days on market, last week they had a dip down, but they're back up to 42, same as Dallas County. Number of homes having price decreases, a steady climb. Inventory as well, a very slow climb, but a climb nonetheless. So long story short, everything's looking normal there. So let's move on to the top 10 ranked charts. Okay, now we're looking at the top 10 ranked charts, hottest and coolest cities and zip codes in all of Dallas County. These are ranked using that same Market Action Index number we just looked at. Remember, a 30 or below is a buyer's market, so we are starting with the absolute hottest cities. And for the first time probably ever, there were no changes in the hottest cities list. It went Carrollton, Louisville, Coppell, Grapevine, Lancaster, Plano, Richardson, Garland, Balch Springs, and Grand Prairie. All remained in their spots 1 through 10. So nothing heated up, nothing cooled off. Very unusual, but let's zoom in to specific zip codes. The absolute hottest was Carrollton 75007, followed by Carrollton 75010, Louisville 75067, Plano 75075, Plano 75025, Coppell 75019, Carrollton 75006, Plano 75093, Garland 75044, and Louisville 75077. So if you live in one of those zip codes, you are in the absolute hottest top 10. You can sell your property for top dollar. Now we're moving on, doing the exact same thing, but the coolest cities and zip codes. The absolute coolest city remained Van Alstyne, followed by Leonard. Those two are the only two buyers markets in all of Dallas and Collin County. And then Sunnyvale cools off 3 spots this week. Prosper heats up 1, Lavon heats up 1, Salina cools off 1, Rockwall cools off 1, Nevada heats up 3, Royce City remains at number 9, and Anna jumps onto the list at number 10, knocking Blue Ridge off the list. So those are the top 10 coolest cities. Now looking at zip codes, the coolest is Van Alstyne 75495, followed by Leonard 75452, Dallas 75204, which is just outside of a buyer's market. We'll see how that goes next week, followed by Irving 75038, Sunnyvale 75182, Prosper 75078, Lavon 75166, Mesquite 75181, Dallas 75219, and Dallas 75203. That's it for this week. As always, if you are looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. Call, text, or shoot me an email. Thank you for watching. I'll see you in the next video.